Hello, traders. It's Tuesday, the 26th of June, 2018. It's 8:01 a.m. Chicago time. Another wonderful day here. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, well, at least morning my time, we have a mixed market. Crude oil is a little bit higher, just 6 cents. The S&P is up a point. Mostly unched. There are some safety assets that are lower. Russell's lower by 2 points, but really the market is teetering on unchanged mostly. The cable's down 36 pips, and the euro's down 33. Gold is off $10.90. Now, yesterday, the jitters, the gap down, and the selling is being attributed to this threat from China back at the U.S. Apparently, China's President Xi said to have told various CEOs last week that Beijing planned to strike back against punitive American tariffs. In our culture, quote, "In our culture, we punch back." Of course, Trade Advisor Navarro and Treasury Secretary Mnuchin here in the U.S. are working hard to walk back plans or comments about restricting investment in the U.S. Navarro says we have no plans to impose investment restrictions. Recent market sell-off was a large overreaction. So this is rhetoric. They're basically saying this is just talk, propaganda, and they're trying to walk it back now. The market doesn't respond well to risk, and yesterday, although fairly active, was not really a massive sell-off. We had good volume on the ES yesterday with good range, but nowhere near what we would call tanking the market. So there's a lot going on there. A lot of tweeting by the U.S. president against Harley Davidson this morning. It's just a reality TV, really. Politics and the way it works is often like this. So not much more that's likely to drive us around. I won't dwell on the news. This morning, what could interrupt our auction? We did just get the S&P Case-Shiller for April, but we're looking for consumer confidence index in the U.S. at 10 o'clock Eastern for June. The number we're after is 128. That's the consensus, 128. And then there's a whole slew of central bank speakers since yesterday and through today. Canadian, Eurozone, Spain, UK, again, Eurozone and US. Lots and lots and lots of central bank speakers today. Not sure if they'll have an impact, but they're there. They're going to be on the feed. Let's hop into what we expected yesterday. Here are our plans. These are the key scenarios from yesterday. Scenario 2 is what has played out. Open test drive down, and a quick move back down to 23.25. That was the key area that was likely to be tested yesterday. Remember, 27.23 is the MC point of control for the entire region since February 2nd sell-off, and that was the key magnet. Once we, as I'd mentioned a couple times last week, I believe, as we knock on the door of the 45.75, right here we knocked on the door last Tuesday at 46 and a quarter. We retested again last Thursday at 47. As we knock on that door, it's made out of glass, and we're knocking with a hammer, and the more we knock, the more cracks we put into it, and eventually we'll break through. And once, or we're likely to break through, nothing will happen, might happen. And once it does, then that's a low volume node between two major distributions on the profile. So once we push through 45.50, then the key target becomes the point of control or the high volume node of that region, and that's 27.23. Now we pushed all the way down to 2700 and a half, which is the next low volume node down. So we pushed all the way through to the other side, and then we finished. Oh, it's starting to rain here. And we finished right at the point of control. Very methodical auction action yesterday. Again, scenario 2 is the one that ended up playing out. But as I said yesterday, I'm quite bearish coming in to the session. So scenario 1 was moderate. Scenario 2 was aggressive, clearly not aggressive enough. And scenario 3 was the responsive scenario that would take us back towards the prior range, which clearly didn't happen. Here's what actually happened. There it is, open, test. What did it test? It tested last week's low to the tick, 27.46 and a quarter. Tested last week's low to the tick, drive, consolidate. I use that as the opening swing low, and then push down and push down, pull back, push down. And notice that the ES remained ahead of the mid. This is the mid right here, the blue line. It remained ahead of the mid until the close, and the white line, this white line right here, that's the point of control movement. Okay, so you can see that the point of control. So what this line is saying, pretty early on, we're accepting these prices. Now we're accepting these prices as value. Now we're accepting these prices as value, these prices. We're good with these prices for a while. And then now we're accepting prices down here. And we're accepting prices down here until right after the close, where it popped up and finished where it did at 27.20.50, right in the MC point of control area. And so what does this say as the point of control stair steps down with price? That's another indication of trend. Now the traditionals, Peter Stadelmeier, the father of market profile, which I don't use, I use volume profile, says 2 times or 3 times the IB defines trend. There's more to trend than that. Trend is really a market that is continuously seeking the opposing force, which means that it is moving directionally and it's out of balance. So it doesn't necessarily have to extend the IB, because you know what? We could have put in the IB early on for a very strong trend and then just stayed inside it. But, even though it balanced, the day really was a trending day. So just make sure you're following the narrative and following what the story's saying. The stock zones yesterday were excellent. I do a review of these and a recap within Convergent in the member chat service, and it's overall very methodical play. Yesterday we saw some pretty good impulses and then continuations, then attempted reversals, which resulted in impulses, and so on and so forth. Tough area back here once it got back to the mid. I interacted with the market back here, and it just wouldn't give it up until after the cash closed. Then it sold off to where I expected it to. I was looking for 27.15 there on the sell from 27.24. Anyway, love seeing the volatility. Yesterday, Delta firmly for the sellers. The seller was in control. And again, we had a bit of a trend day. You can also argue that this is a variation of a normal day, but really it trended down. That carries us into the overnight session, which was completely sideways. The market taking a rest, putting in a pretty much a Gaussian, completely balanced profile, trading both sides of the open. There's the open, the green dotted line, and you can see it's symmetrical on that open, swinging up and down, and trading in the middle currently. So what the overnight session is saying is that we did a lot of volume, 230,000, which was more than we did yesterday on the gap down in the overnight session or the extended hours. But all we did was to test the immediate areas. Notice the point of control in the overnight session. Boom, MC point of control. MC point of control 27.2350. Let's turn that on. Oh, no, we need to stock zone first, and then yeah, it's somewhere in there. There it is, 2250 right there, 27.2250, that blue one. And so overall we're sitting in balance. So what does that mean for us going forward? What is that saying? What that basically sets us up for today. I know this chart looks awfully busy. It's not really this busy. Clear that, clear that. These are just stock zones, and why aren't we going out? All right. So what are we looking at for today? Today, we are looking at a market that is likely to open in range, in value, despite the trend. We kind of have value. It looks like it's well distributed, right? So we have an excess up here, then we have a fairly Gaussian distribution and a taper, right? So overall, we do have some value. The expectation this morning, we're trading 27.24, but this has been swinging back and forth. The overnight point of control, 27.2350, right on top of the stock zone. We're likely to open in a wide open auction, expecting an open auction in range. I'm expecting that we are likely to test out this overnight high. I'm expecting it to get rejected. 31.50 was a beautiful area yesterday for a short. And I'm expecting it to get rejected. I'm expecting it to cross over the opening swing and then consolidate and potentially start to move lower before it bounces. I'm expecting an inside day, a rest day today. We are pretty deep. We're above the mid of yesterday's range. Yesterday, we pretty much closed around the mid of the session. There was a really strong retracement back up, and I'm expecting this to be stuck in this area today. The secondary scenario really just follows the first, but it looks for the sell side first. So open auction that drifts, consolidates at the point of control, test the overnight, push into this 27.10 area, impulse back up, find buyers, consolidate back into the point of control, and rest inside. That's scenario 2. Scenario 3 is open test drive lower. Basically more news, more selling, more fear. So open, test up, drive, and then potentially test this 2700 and bounce back up. And then scenario 4 is the opposite. Test down, consolidate for much of the day, lull everyone to sleep, and then boom, shoot up and take back this tail, this thin area we left behind from yesterday. I won't draw that in here. It'll just be very confusing. But those are the key scenarios I'm looking at today. But I'm also looking at this event at 3 o'clock Central, 4 Eastern. It's in the chat up above. The link is in the chat up above. It's also in the description of the video. We're going to have Aaron Fifield from Chat with Traders today at 4 p.m. live. Hopefully you've registered or will register for this. Registration is still open. There's going to be a discussion of what he's doing now. He's doing algo trading. I find that the fact that he's spoken to 150 plus market mavens, wizards, is likely to bring in some insight. This will also be distributed over podcasts, so we'll convert this into podcast so you can listen to it on the go. Please register if you can, and we'll send you the video as soon as it's done, also the podcast link. Even if you cannot attend, go ahead and register. Again, our registration means no spam, no sales stuff, just your emails used for further invitations to other events. Of course, you can always unsubscribe. Good luck today. Keep it tight. It's a lot of traders are going to want to continue yesterday. They remember yesterday, are going to want to continue yesterday and look for breaks and things like that. However, where we're opening in range in value, we're likely to chop around quite a bit today. So take it easy. Take it easy. Also, news is what's driving this probably, and news is what's likely to move us away from here. So pay attention to news flow. Good luck.